Hello and welcome to this module where we are going to be discussing the business and operational objectives of stock management. When we talk of business objectives, we are talking objectives from the point of view of either the owners of the business or top management within the business. When people set up a business, their main objective is to make money. So when we are talking of stock management and the objectives from a business point of view, we are looking at how we can make our stock to give us the most money, in other words, to make us the most revenue, or how we can save money through the way that we handle the stock. So that is the business side of the objectives. Then we get the operational objectives, which now translate those business objectives into activities that can be carried out on a day-to-day basis in order to achieve the business objectives. So when we look at the business objectives, firstly, we want to ensure that we have adequate and timely supply of stock items for production or sale. If we are into manufacturing, we cannot afford to run out of raw materials. If we run a retail shop, we also cannot afford to run out of stock. So the first and most important objective of stock management is to ensure that there is enough raw materials as well as stock for sale. Secondly, we need to establish and maintain the optimal level of investment in all types of stock, from raw materials to finished goods, by achieving a reasonable balance between production, sales requirements, and liquidity. Whereas the first objective says we need to have sufficient stock all the time, there is also a danger of having too much stock, which now leads to expensive storage costs. So we need to establish a balance where, while we are meeting the requirements of production and sales, we also don't run the risk of carrying too much stock, which at the end of the day may prove to be expensive. We also need to minimize the cost of handling stock from purchasing to consumption. Every time that you are buying stock, there is a cost of transaction. So you need to minimize the number of times that you actually purchase, because every purchase has got a transaction cost. There is transportation cost each time there is a delivery of your stock. So we need to ensure that our stock handling has got the minimum cost possible. We also need to maximize the value of stock and achieve high revenues. In other words, we should not carry dead stock that is no longer valuable. We need to ensure that at all times the stock that we are carrying is of as high value as possible, so that when we need to sell it or turn it into finished goods, those goods have got a high value. We also need to minimize stock losses. So there are a number of ways through which stock can be lost. It can be lost through spoilage, which comes sometimes through bad handling. It can be lost also through redundancy. In other words, you have kept stock for so long that it is no longer relevant. You are keeping spare parts for certain machines that are no longer being used. So these spare parts, they are now useless. So those are all losses that hamper our achievement of business objectives. Next, we look at the operational objectives of inventory management. Firstly, we want to ensure adequate and timely supply of stock items for production or sale through an efficient procurement process. So now we are looking at stock management from an operational point of view. In other words, what is it that needs to be done to ensure that stock is supplied in a timely fashion? What is it that needs to be done to ensure that when production starts, there is no shortage of stock in the factory? Secondly, we need to maintain accurate records of stocks that we purchase, stock that is used, sold, scrapped, or stock that is available on hand. In other words, one of the most important aspects of stock management is record keeping. You need to have an efficient way of recording every movement of stock within your organization. Thirdly, we need to provide valuation of materials in store at different stages of production and finished goods for sale. When we talk of valuation, we are saying what is the current value of our stock. So when we buy stock at a certain price, the value of the stock does not remain at the price at which we bought the stock. If there is inflation, it means the replacement value is also increasing. So if you bought an item A for $10 last month, if this month that same item needs $15 to replace it, your stock value cannot be pegged at the $10 that you bought the item last month. So you need to be able to be readjusting your stock valuation through a process of recalculating your average or your standard cost, which is based on replacement value for each single item. We also need to account for all internal and external stock movements. In other words, there is no stock that must move from point A to point B without a proper record. Many times we are taking shortcuts because you are too busy to record, because it's time to go home. You think you can come back and record the following day, then you forget. At times it is your boss that comes asking for the stock and they tell you they are in a hurry, so you just give them the stock without recording, hoping to record later on. You are sabotaging your own system. You need to ensure that at every point, whatever movement of stock there is, there has to be a corresponding transaction that is recorded and signed for by the person that issued the stock and also by the person that received the items. We need to be able to provide also costing information for manufactured goods. So in other words, if we are making a product that consists of 3 different raw materials, we need to be able to provide information of what is the material cost for making one item. Later on, we are going to be talking about bill of quantities or bill of materials, which is a recipe of how a finished product is made. So it is from that bill of quantities that you are able to calculate the unit cost of producing any manufactured product. Our stock system should also provide us with sufficient intelligence on alternative suppliers. The reason why we need alternative suppliers is because procurement cost is one of the highest cost elements in inventory management. So we need to reduce as much as possible the cost of acquisition. So we need information about all the different suppliers and what is their overall cost for supplying a particular order. Our stock system does not work in isolation. It has got interfaces with other systems within the organization. So you can see our inventory system in the center here. The inventory system is linked to your procurement system because procurement is the one that purchases the stock for us and brings the materials into our stores. The inventory system is also linked to the cost management system in the case where we are manufacturing or we are involved in maintenance and repairs, where we are issuing stock either to a job card for production or a job card for maintenance. The inventory system is also linked directly to production planning systems. Every time you are issuing stock to a works order in the factory, we are keeping track of the quantities and the cost of materials that has gone into that particular product which is being made. Then inventory system is also linked to your sales and marketing system as well, because sales and marketing is the one that is pushing the product that we are making or the merchandise that we order for resale. Then your inventory system also has a link to your point of sale system, which is the interface between yourself and the clients. So when the customers come and they buy in your shop, the point of sale system is the one that takes inventory from your stock system and gives it to the client. In our first module, when we are discussing information systems, we said that interfaces consist of documentation, consist of paper. So when we talk of interfaces between the stock system and other systems within the organization, we are referring to documents that we use to communicate information from one department to the other. For example, a store's requisition would be a document that is created, say, by the people in production that generate that store's requisition to ask for materials from the store's department. And then when the store's department want to buy materials from outside, they issue a purchase requisition to the purchasing department. So this is an internal document that is used by the stores department to ask the purchasing department to purchase or to order some stock on their behalf. Then once the purchase requisition has been approved, the purchasing department will then raise a purchase order, which is now communicating the organization's request to an external supplier. So the purchase order is our way of communicating our request. In our discussion of the system, we said it is possible to simply pick up the phone and call a supplier and tell them to deliver some stock, but that does not leave any record. So we need an official way of communicating this request. So that purchase order is the official way of communicating our company's request to a supplier to provide us with the stock that we need. Once we receive the stock, we generate a goods receiving note or a goods received note. So this is a document that states or confirmed the quantities that have been received from the supplier. So as you can see, at every stage of the transaction process, we are generating documents that provide information of activities at each of those stages. When the supplier wants to communicate to us that we need to pay for the stock, they produce the supplier invoice. So the supplier invoice is a formal communication media from the supplier to tell us that we owe money for the stock that has been supplied. In the next module, we are going to be looking at the distinction between fixed assets and stock, because normally there is confusion between these two, especially in institutions that are selling the same items which are fixed assets in their operations, but also those same assets are stock which is on the floor and they are being sold. So we'll see you in the next module.